Best pick KSOSP market close for June 17th. All right, today we're unpacking a truly historic session for the Japanese equity markets. It was a day characterized by some major index milestones and massive global catalysts.
We'll be moving through 5 key areas in today's explainer: historic milestones, macro drivers, sector momentum, key stock movers, and margin trends and outlook. Before we dive in, please take a quick second to subscribe and like the video so you never miss out on our daily objective market data. Let's get to it. Kicking things off with Section 1, Historic Market Index Milestones. Looking at the broader market action, roughly 80% of all stocks on the prime market advanced today. The Nikkei Stock Average closed at 69,902.25 yen. That's a solid gain of 497.75 yen from yesterday. But the real story? The Nikkei actually broke above the 70,000 yen psychological level for the very first time in history during intraday trading. It hit the 69,700 range in the morning and just powered right through that monumental 70,000 mark. And similarly, the broader TOPIX index marked a major achievement of its own. It gained 22.09 points to close out at 4,013.23. This actually secures its first ever close above the 4,000 mark. This was driven heavily by rebalancing needs from institutional investors and index funds, and that underlying demand really provided some strong across-the-board support today.
Moving right along to Section 2, Macro Drivers and Catalysts. So what exactly fueled this historic risk-on rally? Well, it comes down to a very specific sequence of macroeconomic events. First off, the announcement of a US-Iran ceasefire agreement rapidly erased those Middle East tension premiums. That sent WTI crude futures plunging to a 3-month low, which the market basically interpreted as a massive net positive for manufacturers dealing with high energy costs. Now pair that perfectly with strong expectations that the Bank of Japan is going to hold off on a June rate hike. This keeps the yen weak, hovering right in that lower 148 range, which provides a fantastic structural cushion and an earnings tailwind for Japanese exporters. That brings us to Section 3, Sector Performance and Themes.
Now, all these macro factors really trickle down into specific sector allocations, and we saw some clear divergence here. If you look at the 1-month S&P Japan 500 sector momentum data, information technology absolutely surged, gaining over 23% on continuous semiconductor strength. Materials also saw a really solid 8.2% jump. On the flip side, though, energy contracted nearly 5%, which is a direct reflection of that sharp drop in global crude prices we just talked about. Consolidating these themes, institutional inflows heavily favored 3 distinct areas today. First, AI data center supply chains. They're benefiting from a high bandwidth memory and NAND recovery, driving players like Kioxia and Murata Manufacturing. Second, we have next-generation solid-state battery manufacturers. Huge expectations around EV adoption actually pushed Nippon Chemicon to its daily upward limit. And third, advanced optical technology infrastructure. Strong demand for AI vision systems and liquid lenses lifted companies like Wintest right up to a stop high. Let's zoom in a bit more with Section 4, Key Corporate Stock Movers. Looking closely at the corporate equities that exerted the most gravitational pull on the indices today, fast retailing led the positive charge. They added an impressive 67.82 yen to the Nikkei, mostly on the back of strong overseas sales in China and Southeast Asia, which was really aided by that weak yen. Meanwhile, SoftBank Group and Advantest were the largest drags, shedding 72.30 yen and 52.14 yen respectively. Basically, they faced some profit-taking following a dip in U.S. tech stocks and a few valuation concerns regarding their AI portfolios. But keep in mind, this is largely viewed as just a short-term adjustment. Now, among those top contributors, Kioxia Holdings acted as a primary market driver. The stock hit an all-time high today, catching some really substantial long-term institutional inflows. This surge came right after media reports suggesting the major NAND flash maker is evaluating its first dividend since listing. Coupled with a tight supply in the HBM market and a bottoming out of NAND pricing, the institutional momentum here was, well, pretty undeniable. We also saw some massive individual spikes today, most notably optical equipment maker Tamron, ticker 7740. It surged an incredible 23.91% to near stop high. This leap was triggered by the announcement of an aggressive new midterm plan, targeting an operating profit of 25 billion yen by 2029. To put that in perspective, that represents a more than 2-fold increase from previous levels, driven heavily by soaring demand for AI camera modules and industrial lenses. Finally, let's wrap up with Section 5, Margin Trends and Outlook. Pulling back to analyze the underlying market mechanics, it's really crucial we balance the robust underlying demand against potential risks. The margin buying balance maintained very high levels today. Now, while this indicates a rock-solid foundation of real demand, it also definitely signals a clear short-term overheating risk. Conversely, the margin short balance is decreasing due to partial short covering, so the net environment remains heavily dominant for buyers. But, and this is a big but, this high margin buying balance means there is a real risk of cascading sell-offs if the market experiences any sort of sudden pullback.
Providing a backstop to those risks, though, is the monetary policy environment. As noted in today's analysis, the dominant view now shifts the next Bank of Japan rate hike timing to September or later. This consensus expectation provides a truly powerful structural cushion for Japanese equities. It maintains the weak end, which acts as a major tailwind for those major exporters, and it keeps borrowing costs low in the near term. So, as we look ahead to tomorrow's session, foreign investors need to closely monitor three key areas. First, U.S. market performance, specifically the Nasdaq and SOX indices, which will absolutely dictate the near-term direction for AI and chip stocks. Second, the stability of the dollar-yen around that 148 range. Remember, any sudden shift toward a stronger yen could really disrupt exporter momentum. And third, observe the sustainability of the Nikkei holding the 7,000 yen line. The big question is, will we see profit-taking from early entrants taking their gains, or will late buyers sustain the rally above this historic level? Thank you for watching.